I would say the sector also just look at your iPhone. Your iPhone, you need data centers for the cloud. If you say you want to use more technology tomorrow, you also need data centers, you need a cell tower. So that's the beauty of the real estate sector is that it touches, I would say, all the big evolutions we see in society.
Welcome to FTSE Russell Convenes. I'm David Sol, and in this session we're talking about the real estate market post-COVID and how we live and work differently. And for that I have a special guest, Dominique Moerenhout. You're the CEO of EPRA, the European Real Estate Association. Welcome. Can you tell me a bit about yourself and what EPRA does?
I've been for 8 years the chief executive of EPRA. So EPRA is the European Public Real Estate Association, and so we are, I would say, the trade body covering the entire listed real estate sector for Europe. Property companies on the one side, but also all the investors and the other stakeholders active in this domain. And also very important in this particular context here. So we've been 20 years partners with FTSE Russell, together with an A-REIT, which is our sister association covering the US REITs market, managing together as the three partners the largest global listed real estate index in the world.
And that's great. Now let's talk a bit about listed and physical, the bricks and mortar. What's actually the difference between the listed real estate and just traditional physical buildings?
I would say the major difference between public markets versus the private market is, first of all, the fact that it's much more liquid. So investing in the listed real estate companies is by nature the only way to invest in the liquid investment, which itself invests in assets which are totally liquid. So both a public real estate market and a private real estate are, I would say, an important attribute in every single large global real estate investor. Prior to joining EPRA, I spent 15 years in the private real estate fund management business. So I will never say that private is worse than the listed, but listed has a lot of advantages compared to the private market in terms of liquidity, in terms of transparency, in terms of getting access to the public markets when the companies need to go either for new equity issuances or debt issuances. Is much more rapid and much quicker than in the private real estate market. But all in all, listed and unlisted, or public and private, in the medium to long term are all the same. But what is important for global investors, which by definition have been much more active on the private real estate market over the last 20 to 25 years, is very important that those investors understand perfectly the attributes of increasing their strategic or tactical asset allocation in the public market.
So it's a tool for international investors to allocate to real estate in a liquid format. Can you talk a bit about COVID? What happened after COVID? We had a period, of course, 2020, everyone was working from home. And over the last couple of years, you have this hybrid way of working from home and maybe working in an office. What are you seeing, not only in Europe, but in the United States and in Asia? How are these trends happening?
So it's clear that we have seen different approach to the work from home phenomenon in many parts of the world. Europe, which we are covering, people came back immediately to the office, probably more in the south and the northern part of Europe, where today probably most of the workforce is between 4 to 5 days a week in the office. We saw a big difference also with the London market, where people are also back to the office, but it took much longer for the London-based or UK-based companies to bring their staff back on a more permanent basis in the office. My view on this, work from home, is it due to stay? Probably it will stay. I think it's probably a good way of keeping a good balance between a private and professional life, especially in specific functions. But I remain convinced that the bulk of the people should be on a permanent basis in the office. Because people, of course, when you work from home, you're far away from your colleagues. I would say the exchange of communication, I would say the ideas generation. This is not something you do via a Teams meeting or a Zoom meeting. So people definitely need to be sitting together. especially in, I would say, sales functions, especially more the front office functions or specific functions in the companies. My personal opinion about it is that the companies which have enforced, I would say, a deep work from home policy will regret it in a few years, because especially I see that in many countries in the world where the younger population, they can't learn from their colleagues if they work 2, 3, 4, 5 days a week from home. They need to be sitting together, and that's also the trend we have seen everywhere across Europe. The US was a little bit behind it, especially people going to New York. I can tell you a few years ago, 2 years ago, if I wanted to meet with investors in New York City, getting an investors meeting on a Monday, on a Friday was quasi mission impossible. Today it's possible, so people are back. But probably in the cities where the commuting time is longer, might see a higher proportion of work from home than in the cities where I would say traffic, or I would say connecting between office and home is not of an issue. In Asia, I was in Asia together with the FTSE Russell colleagues and the NAREIT 2 weeks ago. We didn't have any issues in getting investors meetings even on a Friday. Just to give you an anecdote, so we were in Tokyo 2 weeks ago, and on a Friday we had the 6 meetings, and we had the last meeting at 5:30 p.m. on the Friday afternoon, which is probably more complicated to get in London. I would say, as a summary, I would say work from home is something we might see, but I would personally encourage, I would say, companies to limit it. Personally, my daughter is 21. She's just finishing the university right now, but she told me work from home is not for me. I want to be there with the colleagues. I want to learn for the more senior people. And for me, being 5 days a week in the office is something I want to do. And I'm sure a lot of the younger generation has the same opinion.
You would agree with that, yes. You mentioned the partnership FTSE EPRA NAREIT. Of course, it's a very important partnership. We have the FTSE EPRA NAREIT index series, which is really the bellwether of the listed real estate markets.
Oh, clearly, yeah.
And you, of course, analyze also the subsectors within their hotels, commercial, other sectors. I know you presented recently and you spoke about the 5 megatrends. Can you talk about those 5 megatrends?
Yeah. So maybe before moving the 5 megatrends, talking about the index, it's clear, together with the FTSE Russell colleagues and NAREIT, so we are every year traveling throughout the world, I would say, to bear the torch of the listed real estate sector, and more importantly for us to make the very few investors who still not use the FTSE EPRA NAREIT index series, to convince them that this is the best index in the world. Just to give you an idea, today the FTSE EPRA NAREIT index series is benchmarked by over 320 billion US dollars in the world, which makes it by far the largest global listed real estate index used by all the big managers in the world. There are some areas in the world, I was talking about Japan, where I think there is a huge growth opportunity for, I would say, promoting even more the index, but this is something we will be tackling as partners in the months and the years to come. So clearly, yes, when we meet with investors, and of course we have a neutral position vis-a-vis the market, everywhere I go, if I come here in the US, I go to Asia, we travel throughout Europe, everybody, I would say, speaks about the index. I don't want to speak about some competing indexes, but we know that the other ones probably have around 20% of the same assets tracking the index. So we see where the difference is. And I think this 20 years partnership, so we are celebrating 20 years partnership between the three partners this year, is something which is remarkably appreciated by the investors community globally. Coming back on your second part of your question about the mega trends, I like to speak today about what I call CC. I'm not talking about the princess here. I'm just talking about the 5 mega trends we see in the market. So I would start with specialization, and all those trends, more or less, we can see them across Europe, but in the US and also in Asia. So specialization, what do I mean by this, is that we have seen over the many years more and more listed real estate companies, the famous REITs, being more specialized or becoming more pure players in one specific domain. If I think about Europe, for example, if I look at the total market cap 15 years ago, over 50% of the European market cap was composed of diversified companies. So that means companies investing in multiple sectors. So a company investing, for example, in offices, logistics, and residential altogether. So we have seen this portion of diversified companies diminishing tremendously over the last 15 years. Just an idea today about Europe, just around 30% of the total market cap are diversified companies versus 50% probably around 15 years ago. So that's the first trend we see. The second one, which we see probably a bit more in Europe today, is the internationalization of the REIT sector. So that means having a REIT which is domiciled in country A, investing in country A, B, C, D, F, and G. So companies going more and more towards a broader investment community instead of being only focusing on the country where the REIT is domiciled. Third big trend we see is scale. And this is something we see within the asset management community, but also something we see in the REIT sector is companies are becoming bigger and bigger. And this is also what investors are looking for today. So what does an investor in the listed REIT wants to get? He wants to get an easy access in a company in which he can easily invest, which also brings a certain liquidity. So of course, the REITs which have a smaller, I would say, market capitalization, I would say, do not get, I would say, traction from the largest investors. So we see a certain, I would say, scalability, a certain consolidation in our industry. I was a bit, I would say, interrogated by questions we received a few months ago by investors saying, yeah, but a lot of those smaller companies and the consolidation in the listed space goes more and more towards the private market. And just to give you a few figures about Europe, if we look at the M&A activity over the last 5 years across Europe, 60% of the M&A were public to public transactions. So a public company taking over another public company, and only 40% of those transactions were public to private transactions. So that's just from a numbers point of view. But if we look at the volume, so the market cap of those transactions, today in Europe, 80% of the volume of those transactions were public to public versus public to private. So when people tell me that a lot of those companies will disappear from the spectrum, this is completely wrong. People are wrong about it, but it's clear that consolidation will remain a trend we will continue to see probably in the next 12 to 36 months across the industry. Fourth big trend is sustainability. I think sustainability is probably the only area where Europe has been more advanced compared to the other parts of the world. At least there is one area that's probably the one. Sustainability is not a new phenomenon. Sustainability has been on the map for over 15 years in Europe, primarily driven by the Dutch investment community. And it has percolated across the industry.
And just to be clear, sustainability refers to the carbon footprint embedded in the building material.
Yeah, I would say sustainability covers multiple factors, right? It can cover, I would say, the environmental aspect. It can cover social aspects. It can cover also governance. So sustainability is clearly something which is here to stay. But of course, we also see a changing paradigm inside sustainability, because we start seeing in some parts of the world investors pushing back a little bit on sustainability. Whilst in other areas, I would say the regulatory framework, if I speak about Europe today, the regulatory framework probably has been too developed, which has also created some, I would say, burdens for the companies, in particular about reporting burdens. I think probably in Europe, I would say Europe probably overshoot in its own feet over the last 10 years. So no, they tend to, I would say, to clean a little bit of regulation to make it a little bit easier. But sustainability is something which is here to stay. But today the big focus is, of course, about the decarbonization of the sector and about all the initiatives which are being taken. Sustainability need to have a social attribute. A few years ago, you could hear investors saying it's a little bit sustainability at any price. Today is we focus on impact, and we want to make sure that all the sustainability initiatives we are taking are earnings accretive. So we could see also a shift from that point of view, but sustainability remains on the top of the agenda. Last big trend we have seen is innovation. So innovation is clearly, we talk about innovation, we can talk about the prop tech, is something which is also like sustainability on the top of the agenda of every single CEO in the world. This has also an impact on the specialization or the new sectors we see coming on the industry, because innovation also leads to more demand for data centers. Data centers is something which we didn't talk about many years ago. Data center companies have, I would say, increased in number, increased in size.
Clearly, the data centers, we need them for AI, for training of models,
for the cloud. So this has a big impact. And also this innovation also has an impact in the logistics sector, has an impact in the cell tower sector, etc. And just to give you an idea, for us in Europe today, those new sectors which are driven by innovation represent 11% of the FTSE EPRA Developed Europe Index, and we tend to believe that it will increase up to 26 to 27% in the next 8 years in the FTSE EPRA Developed Europe Index. So this is also a big mega trend we are seeing. So we talk about specialization, internationalization, scale, sustainability, and innovation.
These are interesting trends. Of course, one of the big changes this year have been around geopolitics. 2024 was a record year in terms of elections. Very important election we've had, of course, was in the US. And the Trump administration announced tariffs. There's a lot of talk around tariffs. How are tariffs impacting the real estate, the listed real estate market?
I would say there is no direct impact of the tariff on the listed real estate sector, but we need to keep a very close eye on what's happening, because it might have an indirect impact. In some countries in the world, some people speak about potential recession. Can have an impact on the number of square meters that the companies might need in the future, might have an impact in the way people shop. People might want to go for more savings, so shopping a little bit less, which could have an impact on the retail sector, which could also have an impact if there is less consumption, a certain impact on the logistics sector. If you want to save more, probably you will travel less, so you might use less hotels, etc. I would say there is no direct impact, but the indirect impact of the trade, the tariff discussion is something we continuously look at, and we keep, I would say, a very close eye on those aspects, because this might or could affect the one or the other sector.
So you're really following consumer behavior across the world, hotels, retail, shopping.
You see, that's the beauty of the real estate sector, because it touches all the things you do in your day-to-day life. If you work, you need an office. You have shop, you want to go shopping, you need physical brick and mortar. You have a house, you need a lodging. You want to walk more, you need to have the required space, etc. I would say the sector also, just look at your iPhone. Your iPhone, you need data centers for the cloud. If you say you want to use more technology tomorrow, you also need data centers, you need a cell tower. So that's the beauty of the real estate sector, is that it touches, I would say, all the big evolutions we see in society. We speak about urbanization. We can speak about aging population. I didn't speak about the healthcare. We speak about an increasing number of students everywhere in the world. Student housing is also a big sector, which was probably not really looked at 15 years ago, but is much more, I would say, part of the what investors are looking at today. So the real estate sector is, to my opinion, because of course I represent the real estate sector, is probably one of the very few sectors which touches every aspect of your day-to-day life.
Touches all aspects of our lives. So we'll be keeping a close eye on the data through the FTSE EPRA REIT series, and to see how the way we live, how we behave is changing over time. This was a fascinating discussion. Thank you very much, Dominique, and we'll keep an eye together.
Always great pleasure, David. Okay, thanks for having me again. Cheers.
Thank you.